You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that music means it is time once again for a little show we like to call around here, The Option Block, my favorite bi-weekly source for all things options related. Hopefully, it's yours as well. My name is Mark Longo from the old OptionsInsider.com, as well as from the ever-exciting The Options Insider Radio Network. If I sound a little bit different, because I'm still coming at you from the southern studio here. A lovely day here in the deep far south. So that's nice. We shouldn't have any chance here of getting knocked off the air with all of this goodness here going on weather-wise. We've been fortunate so far with our weather. Let's hope, fingers crossed, let's hope the weather holds. And of course, hopefully you guys, I know you guys like to listen live. Unfortunately, it seems like our distribution partner, our live streaming partner, Mixlr, got knocked out last week with some sort of massive issue on their server side. I think they're still rebuilding their servers, so we're trying to go live here. I'm not sure if you guys will be able to access that, but if not, of course, you guys can get it, as always, where most of you get it, which is, of course, on your iTunes, your Google Podcasts, all that. So if you listen on demand on the podcast, you won't notice a difference. But if you're trying to join us live, at least like another day today, probably, it seems like that still will not be the case. Don't send us your hate mail. We know you miss us. We know you love us. Send it to Mixlr. They're getting a ton of it, so don't worry. They're hearing from you guys. They're trying to get it back up and running. But in the meantime, live to tape, you can get it wherever you find your favorite podcast. And joining me on the old program today, let's go around the horn. Let's start, in a happy place, a tranquil place, a place called St. Charles, Illinois, where we are joined by none other than Uncle Mike Tosaw from, surprise, surprise, St. Charles Wealth Management. What are the odds, Uncle Mike? You could have landed anywhere in the world with your St. Charles Wealth Management, but you landed in St. Charles. What are the odds, sir?
I would imagine astronomical, but I'm typically not an odds maker. But nonetheless, always happy to be here for another exciting episode of the Option Block.
All right, and also joining us, speaking of defying the odds, a very rare double appearance, twice in a row. The same man holding down the hot seat. I guess it wasn't uncomfortable enough for him last show. We've got to turn up the heat. That is Mr. Colin Songer from the Active Trader Strategy Desk over there at Fidelity. Mr. Colin, welcome back. You're going to be old hat at this now. 2 shows in a row. It's going to be old hat.
I love it. I had to call in some favors to get this done, so we definitely got to make it worth my while. So thanks for having me on.
All right. First, the last emperor, now you. For both fighting to do double duty here on the show. We like it. We like it. Our audience clearly likes it, so keep it up. And all that cacophony in the background, listeners, means you might think we're being joined by the meatball, but we are not. We are actually joined by the Rock Lobster, who, ironically enough, is mere feet from our Options Insider Studios there in Chicago. This guy's been all over the place. He was in California. You know, if you listen to the show, he never leaves Maine. But he's out of Maine. He's in California. Last time he did the show, he's next to seals. And now he's not that far from our own studio. I should send him in there to do the show from there. But we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome to the program. And what the heck brings you to Chicago, sir?
We have Carmen Line meetings, Option Pit meetings. And, and it was on the way. So I figured I'd just swing in as I flew over.
You know what it was. You liked that steak.
Or my arms tired.
You liked that steak last time. You wanted to get another one. It was only a couple of weeks ago, but I can't blame it. Gibson's is pretty good.
It was. I'm still actually. I still dream wistfully about the steak.
I don't know if you saw it, but Gibson's even retweeted our post about our live show from your thing. So you should go in there and mention that to the manager while you're in town. Say, hey, I was part of this very exciting live cavalcade of stars here. Maybe you want to hook me up with a free steak. See what he says.
I might do that.
All right. Since I can't do that because I am not in Chicago, I shall instead continue on with the program right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we discuss, surprise, surprise, what the heck is trading? It's another weird one out there again, listeners. We started, one of those weird days, listeners. We talked about it before on the show. I think actually might have been with Colin on last time, where those rare days where we see markets kind of rallying and vol kind of rallying all at the same time. A very rare thing. Of course, we're talking VIX cash. You get into the futures. It's a little bit of a different beast. I get that, but still. Net, what most people like to watch is indeed the cash, and the cash was up, the market was up, and we had a similar scenario, at least coming into showtime here today, where we saw most of the major indices were up, kind of breaking that cycle a little bit now. They're kind of mixed now, and we saw vol up a little bit as well. Coming into showtime now, we're seeing the Dow up about a little over 0.1%, about not quite 0.2%, but a little more than a tenth. We're seeing the S&P off about actually pretty much unched. The S&P is unched, and the Nasdaq pretty much unched as well. So slightly in the red, but not so much. We're seeing, of course, gold still up. All this uncertainty increasing. And now issues with Iran, giving a little bit of a lift, a little bit of luster to the shiny stuff, 1418 coming into showtime, so well north of that 1300 level. Crude taking a bit of a break, 57 and a quarter or so out there in WTI land. And all this uncertainty means a VIX cash, once again, taking a chance to inhale and then exhale and then inhale again. It's kind of vacillating right around. It was up slightly coming into showtime. Now it's right around unched, right around 1540. Still north of the 15 handle. And I do recall looking, I think, pretty good for my vol views prognostication. So I'm just going to put a stamp on it right now and just freeze it and say, okay, I win for the rest of the week. I'm sure the Rock Lobster will take umbrage with that. Speaking of the Rock Lobster, I think he's finally found his mute button. So let's get him to unmute now. Mr. Rock Lobster, what is catching your eye on your global tour of America, sir?
You know what? I thought I was in the 15 handle on vol views. Did you write down my number? I think you did. You're not taking the vol view credit on a Monday when you got 4 days to go. I will take them.
You know how this game works. I will take my victories when they come, sir.
That is the spoils of owning your own show. You will claim victory when you feel like it. VIX is again boring for Volland. I just got text from all my clients. Volland is boring. Nothing's going on, and let's say why. We have, and where's Alex with his hat when we need it? We have G20 coming up Friday. I'm trying to create a position around that, like where we get kind of a good move or bad move sort of right around that. I don't think you have to do much until then. And then, of course, the Fed's going to cut rates because the economy is slowing down, which I still haven't figured out where it's slowing down, but it's slowing down somewhere. So there's not a reason for vol to move. And we have The SPY is not holding on. I guess SPX is not holding on any gains. So this is, SPX is up 70 cents. So this is one of those days where nothing is happening. Nothing will happen. And nothing's going to happen this week until we actually have some positive news.
And just because you asked me to check, I don't like to cut you off, but because you asked me to check, I went and did. I checked what you prognosticated for vol views. You or the meatball, I forgot who was on. I think it was you, were on. It was 14.35 for this time next week. And in case you're playing the home game, where was VIX cash at the start of the show? Oh yeah, 1540. Where was my prognostication? Oh yeah, 1540. Put that in your pipe and smoke it, sir. So there you go. It is a literal bullseye. They don't get any more accurate than that. I am the Karnak of vol. There you go. Thank you for making me check, because then I got the exact bullseye. So that makes my win that much more demonstrative.
I think, honestly, I was just a full handle off. That's not too bad.
That's not bad. Not bad at all.
But I have 4 days.
I love how you take umbrage when you're a mile away.
When I'm not even close. But you know what? That's the role of me on the show as a spoiler. That's what I get to do. I get to take umbrage whenever I feel like. But if anybody's expecting a vol to happen, unless we get some weird news event, good luck this week. This is a week for, I think, just sitting and watching paint dry.
Well, technically, I don't know if you know this, but we are supposed to sell in May and go away. I'm not sure if you've ever heard that, because that is what the smart money does, sir.
That would be costly.
Yes.
That would have cost you like 1,200 basis points, I think.
Of late, that would certainly, last couple of years, probably not the wisest of scenarios. All right, sir, I'm done with you. Go back to your mute button until I call for you again. Let's keep on rolling. I love how you argue with me, and that was good though, because it just made my accuracy, put it in that much more stark relief. So I thank you for that, sir. All right, let's keep on rolling. Someone who only takes appropriate umbrage, that is Uncle Mike. Uncle Mike, sir, I know you're not taking umbrage about VIX, so what is catching your eye today? What umbrage are you taking?
The only umbrage that I can take today is the fact that there's not enough events happening for me to take umbrage on, I guess. It does look like today is really a meh day. The one thing that I'm seeing that's not quite as meh is we do have longer-term bonds. TLT has a little bit of movement on it, but other than that, there's really not a ton happening. I mean, Facebook is up a little over 1%. In a day where the rest of the market's not moving. The Russell is down 11 points. But typically the things with which I'm watching, there's really not a lot of things to watch. So I would say this is a market kind of like an 8-year-old baseball game where all they do is walk every play. And then when one team gets to the 10-run rule or the 20-run rule and they call the game off, it gets called off. But we don't have that here. So it's kind of like watching 8-year-olds play baseball and every kid walk.
That's not a bad analogy. 8-year-old baseball for today's markets. I kind of like that, Uncle Mike. I know you're a devotee of the shiny stuff, sir. That has been on quite the run of late. I know you're more of a silver guy, but you like gold too. Anything happen in your neck of the woods in the shiny stuff with this massive upswing we've seen of late, sir?
I don't know if I would necessarily call it a massive upswing, but it's definitely an upswing. Actually, I was talking with a client the other day. We were kind of excited about our silver position going higher, and she had said, "Oh, are you saying hi-ho yet?" And I'm like, "No." I think that we're having upward movement, but it just feels like a lot of upward movement because it actually is upward movement, and this would be in both gold and silver. I think we still have a ways to go before we get to the all-time highs that we made about 8 or 9 years ago with the shiny stuff, both gold and silver. But there's a lot of potential for upside movement with the world events that are going on, and what we've seen over the course of the last couple of weeks could just be a taste of it. Time will tell.
I think you have to just come up with a new tagline, a new slogan for our network, though. You ready for it? How about this? As exciting as Pee Wee baseball, huh? Maybe sometimes more exciting. What do you think?
Ooh, that's exciting.
I would tune in to that's a high degree of excitement. I would tune in for that. Mr. Colin, holding down the hot seat, are you as exciting as Pee Wee baseball, sir? And also in these kind of somewhat blah markets, what is lighting up the tape over there in Fidelity Land?
Yeah, I'll cover some. There are definitely some new names on here, so I guess I'll add the spice to the dish. So the orders by customers. The first one on top of the list is symbol PTN, Paladin Technologies. So they helped develop one of the drugs that was okayed by the FDA. It touched a new 52-week high today, but sold off since. Previous close was $1.34. It opened up at $1.70 with a day high of $1.78 and a day low of $1.21. Actually, just created a touch on a new day low here, so it's currently trading at $1.20, down 14 cents. And the volume today has been more than 10 times the 10-day average volume on it. So really interesting, a lot of volume coming in today, so interesting action there. The usual, I mean, I shouldn't say the usual, but it seems like I'm bringing this up every time I'm on. Beyond Meat Incorporated, right now in the second spot for batting for Pee Wee Baseball, and it's based on the headline of Interstate Hotels and Resorts announcing a partnership of Beyond Meats. Previous close was 154 spot 13. It opened up at 151.88. Had a high at 152 spot 7, low of 138, and currently is trading at 141.85. So down just about almost 8%. So the call to put ratio for Beyond Meats was reflecting a 1.06 calls for every one put, where the 90-day average volume was sitting at 1.21 to every one put. So under that mark that we've been seeing. In the third spot, we had symbol NERV, which is, I'm going to say Minerva Neurosciences. Another one, biopharmaceutical, met its key goals in phase 2B in one of their drugs. Had a large open there. Previous close was 4.23. It opened up at 7.77 with a high of $8.32, but it's sold off since. It's currently trading at $6.30, but it's still up $2.07, which is roughly about almost 50%. So interesting enough, the call to put ratio on this one is showing a 1.19 call to every one put, compared to its 90-day average volume of 3.17 calls to every one put. And lastly, in the fourth spot, we have that lovely Slack Technologies with symbol WORK, WORK. So that hit the fourth spot. It still seems to fall off from its first day of trading. Previous close was 37.22. It opened up at 36.32 with a high of 36.97 and had a low of 35.35. And then the last one, Advanced Micro Devices coming in, AMD. It previous close 29.1, opened up at 29.32 with a high of 29.40 and a low of 28.67. This is based on a headline that hit about NVIDIA stock has less upside because of rival AMD's new chip, analyst says, according to Barron's.com. So don't know if there's a connection there, but you can see the reaction right now. AMD's trading at 29.26. It's up just 16 cents. It's sold off below its 20-day moving average, but right now it's still holding above its 50 and 200-day moving averages. And the call to put ratio for its volume is 1.46 call to every one put that's been traded, compared to its 90-day average of 1.64 calls to every one put. So that's what our Fidelity customers are currently trading.
Yeah, it seems like the market may be waking up to the fact that, hey, Slack, that functionality is offered on so many other platforms. And yet, for a while there, you're right, they were rally ho mode. They got all the way up there. Let's see, what's their high? 42. They got from 30 to 42, and then not so much ever since they're coming into today right now. 36.5, so off so slightly. Still, I think, looking decent compared to their IPO price. So interesting stuff here. Let's see, what is their low? Their low is 35.35. So yeah, interesting to watch all these. So many. This is certainly the most volume for IPOs we've seen in quite some time, since back in the go-go 90 days, and also, of course, least profit we've seen from most of these names from a similar time frame. Those names back in the 90s didn't make a heck of a lot of money, and these ones today, at least so far, not making a heck of a lot of money. Let's see what's making some volume, though. Let's go out to the big indices, see what's lighting it up out there. Let's go backwards. Let's start with the Russell. Russell actually kind of light today. Kind of a light day, we mentioned in the indices. 75,000 on the tape for the IWM. About 320,000 is the ADV out there. The Qs, similar deal, 206,000 on the tape coming into Showtime. ADV just a tick under 800,000. The S out there, 520,000 coming into Showtime with about almost 1.4 million is their ADV out there. SPY, same thing, about a third, roughly a little less actually of the volume out here. Looks like about 850,000 contracts on the tape. The ADV about 2.8 million out there, and the VIX also light, about almost 160,000, about 157,000 contracts on the tape. ADV 451 out there, so pretty light, well off the about 700,000 that hit at one point out there. Let's keep on rolling here let's see what's lighting it up in the equity option landscape. Let's do a full rundown. Let's go from number 20. Let's go all the way down to number 20. Number 20, Twitter. A cool 55,000. Number 19, Amazon. Amazon, just nothing today. 57,000 contracts only. They do that in a blip some days. And today, that's it for them. Number 18, Ye Old Telephone. 63,000. I'm sorry. Number 17, Diz. Not that far from where I am right now. Ye Old Diz, 78,000 on the tape. Number 16, a tie, also 78,000 for Netflix. Number 15, the aforementioned Beyond Meat, a.k.a. the name that you Fidelity customers cannot get enough of. 86,000 contracts on the tape. Number 14, GE, 90,000. Number 13, good old AAL with 92,000. Number 12, Baba, 94,000. Number 11, Bank of America, 100K even. Number 10, good old Softy, which, by the way, if you listened to Twifo last week, you'll hear has now usurped Apple as the biggest single name in the Russell 2000. So there you go. A little bit of trivia for you out there with all this recon happening this week. Apple actually a paltry number 3. It goes Microsoft, then Amazon, then Apple. So how the mighty have fallen. Number 10, Microsoft, 107,000 contracts on the tape. Number 9, Snap, $110 on the tape. Number 8, good old BMY with 111,000. Number 7, Micron, $133 on the tape. Number 6, Tesla, I believe it is pronounced, 135,000 contracts on the tape. Number 5, HAL with 137,000 contracts on the tape. Let's just pull up that one really quick and see what's going on out there. There we go. That is, of course, Halliburton. And, yeah, they've had an interesting little run up, right? They're at about 22.69. They've spiked up. About on Wednesday, they were trading 21 and change. They're up about $1 from there. But actually, they rallied up more than $1. So they had a nice little pop of late, of course. With all that going on in the energy space probably being felt out there as well. Halliburton, not a name we see usually in the top 5, but there it is, number 5, 137,000. Number 4, good old CZR. I think we'll be hearing about them again in a wee little bit. $165 on the tape for them. Number 3, Apple, 169,000. Numero dos, Facebook, $171. And rounding out the top 10, number 1, the aforementioned AMD, 198,000 contracts on the tape. So even though it's a bit of a quiet day out there, there's still some names out there trading it up. And let's go explore some of those names as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that music means it is time for the Odd Block, the portion of the show where we get a little weird, we get a little wild, and we see if the rock lobster can find his mute button again. All these 3 things and more we shall discover on this episode of the Odd Block. Let's kick things off. Let's go out. Let's go find some of the biggest prints that are going up out there right now in single name equity options. Let's just pull some of those and see what's lighting up the tape on this otherwise quiet day. And our first stop is actually a name we just talked about, our old friend Caesars Entertainment Corp, ticker symbol CZR, trading today a whopping $11.48, up about $1.50, or nearly 15%. So a good day for Caesars. This is the name that's kind of been all over the place of late. A year ago, they were trading 1080. They got up to about 1190. That's their 52-week high. So it's kind of been range bound, but a nice 2-point range. Roughly, actually, no, it got lower than that in December. It got down to 590. So I take that back. It got cut almost in half. So it has been kind of all over the place, this name of late. And if you've been listening to the Odd Block, you know they've kind of been all over our Odd Block as well. And today they are the biggest single individual equity option print, going up outside of the indices, of course, listeners, here. So single name equity options, 32,350 of the June, expiring on the 28th, so in the weeklies. 11 half calls going up for 23 cents. These things were 22 at 32, so it looks like this has all the hallmarks of a bit of an overwrite. These were opening. There is no earnings to be spoken of, and the earnings are on the 31st of July. So not an earnings play. Looks like a very near-term harvesting of the old risk premium with some now in-the-money covered calls, Mr. Rocklaw. So maybe someone deciding, after today's pop, they're deciding to, if they get the heck out of Dodge at these levels, they're not too upset about it. What do you think about this, Mr. Rocklobster? 32,000 calls expiring within a week for 23 cents. Savvy, no savvy, what say you, sir?
Isn't this isn't Caesars getting bought out by, that was on the top of the show, right? So they are, I guess they're just trying to sell the price and get the extra gas out of it. I thought Caesars being bought by some funky gambling entertainment company. I can't remember which one it is, but I look at this and it does have kind of the whiff of a call, some sort of buy right. What are they trying to pick up an extra 2%?
Looks like
that looks like it's about it for the week.
Yeah,
I'll take my 2% and run.
Yeah, it's El Dorado Resorts. They announced over the weekend they're going to merge with Caesars. They're offering a 51% premium to Friday's close, pegs the price ranging from $12.70 a share to $13.01. This guy sounds like he doesn't think things are going to be moving to that level in the next week or so, because
I guess that. Yeah, because the deal, I guess, the stock will move to the premium price over time. So he figures like, okay, I'll get my 23 cents now. It should be free money. Well, maybe, unless somebody else wants to buy them. And then he's going to be grumpy.
I guess. I mean, these calls are already pretty much in the money. And he's got a little bit more. If that price is to be believed around $13, he's got more room to run. These could very conceivably be in the money calls by the time these go out. They already are in the money calls. They could be far in the money calls by the time this goes. Yeah, this is an interesting choice. I'm thinking he wants to just get the heck out of Dodge, and he's going to do it 32,350 times, and he's going to take his 23 cents. But you think he would, if he waited a week or two, he might get out at 13? I don't know.
I think that's. I would say it's a. These calls were to the June 28th. They're trading 13 cents right now. Actually,
well, there you go.
So
he's laughing all the way to the bank.
Maybe he's a little savvier than we know. Yeah, 37,000 calls trade on this strike. So I think somebody's just pounding the crap out of these because the deal isn't going to happen. Or not to say the deal's not going to happen. It's not going to fly to its deal price in the short term.
Clearly not. They've decided this far and no farther. And they're willing to put their money where their mouth is, to the tune of 32,000 contracts. That could easily be a buck and change in their face. But they're wagering not. What do you guys think? So far, he's laughing all the way to the bank. Got a dime in his pocket 32,000 times. So there you go. Who are we to mock him, sir?
Exactly. That's still not bad for a day, just for a day's work.
Yeah, that's pretty crazy. On a name that's been moving a lot, that has had some corporate action, to see those in the money calls come in or I should say not in the money, but very near term calls come in and in the money, I should say, kind of both. They're coming in that aggressively. That's interesting. Interesting choice. Again, maybe the fact that he hammered the strike so aggressively had something to do with that. Who knows? But we shall see.
Because he sold 32,000.
That may have played a part. If he goes to buy him back, they're at 50 cents now. Oh, there we go. All right, let's see. And now,
I guess
we're good.
The biggest shovel wins in the sandbox. I guess
that is the case. At the end of the day, the bulldozer and the steamroller triumph over all, sir. All right, let's see here. Next up, now we're talking some hot names. The other biggest print in single name equities, right after that hot Caesars business, Mr. Rocklop. So you think hot names, you think Tesla, you think SPY, you think VIX, and then, of course, you think Mallinckrodt Pharmaceutical Company. This is the mouthful of a name. Mallinckrodt. Mallinckrodt. I'm assuming I pronounced that correctly. It is an Irish name. This is Mallinckrodt PLC. They are an Irish tax-registered manufacturer of specialty pharmaceuticals. So there you go.
That is a mouthful.
That's a mouthful of a name right there. This one coming into today's showtime, feeling a little bit of a heat, off about $0.50 or nearly 5%, trading about $8.50 or so. And this one, kind of looking at the chart, this just screams biotech to me, Mr. Rock Lobster. A year ago, they were trading, looks like about $20, and then they rallied all the way up to about 36, almost 37. Looks like that was back in September of last year. Then they kind of sold off again down to about 30. Looks like around Christmas Eve they got close to in the high 20s and rallied back up to 30, then sold off again right around the beginning of the year to about 18 or so. And then they kind of vacillated there around 20 for the better part of the beginning of the year. Then the last month or so, they've been selling off again, back down to where they find themselves right now at 8.5. So pretty much almost exactly at their 52-week low. So not exactly good times for the company whose founder is Mark C. Trudeau. So there you go. A little bit of trivia here for Mallinckrodt. Mallinckrodt PLC. Everyone's favorite name. Let's see what our Eye of Sauron found out here. It had to be something big to come on our radar today. Yes. 30. Oh, look at this. Long term. Interesting. 30,000 Jan 21. So not 2020, but Jan 2021. 18 calls for $1.65. And guess what, Mr. Rocklobster? They're not overwriting because they're not saying, hey, I want to just get some of this and I'm done with this thing. They're going the other way. They're lifting offers. These things were actually not that bad for a illiquid name like Mallinckrodt PLC. They were only $1.40 at $1.65. And the guy lifted the offer 30,000 times for $1.65. That is clearly opening over there on the Philly. There's a tons of earnings between now and Jan 2021, so I won't bore you with that stat, listeners. But still, opening size, long-term, out-of-the-money call paper. These are roughly 10 handles out of the money right now, Mr. Rock Lobster. Paying $1.60 to do it, there's a lot to sink your teeth into on this one. Cheap name, spending a lot for options that are pretty far out of the money, that have a long way to go, so he's got some time on his side. He's got about a year and a half, but still, this is interesting. And if it gets back up there, he's looking at it, well, it's below his 52-week high. The 52-week high was about 38, so it's not quite there. So he's got some room to run if this does happen. This is a weird one. This one, I would like it better probably if it had like a little bit of the old, as our friend Brian says on Option Playbook Radio, a little bit of the fig leaf component where you're writing some near-term stuff to finance it and then you play around that way. But this guy's obviously just setting it and forgetting it for a nice pop over the next year and a half. What do you say, Mr. Rock Lobster?
At first, I thought this was a misprint and the guy bought the 8s for $1.60.
That would be better. I would like that a lot better, yes. I guess the stock could get up there because it was just these generic drug makers are all just getting smeared by, I guess, getting sued for opioids and whatever the heck. So all of these stocks are just in the basement world. The only thing I could see is if you're going to buy something that far out of the money, it's good that he went farther in time. But dang, way out of the money. So it's on the fig leaf. Is there something a little covered on that? I assume they're going to be right. Another thing that's not great about this trade, by the way, is, maybe there's somebody buys these generic drug makers. What's the takeover premium on this thing, right? But even if it doubles, it goes back to $16, $17. They're not making anything. Yeah, those calls are getting crushed.
So, buying out of the money calls and stocks that could easily be bought out is probably one of my least favorite ways to buy calls. I mean, if they did this like a little smarter, like, the 818 1x2 or something like that, they could do that for maybe $1 or 80 cents. I could see doing that kind of a trade. But this is that trade has a lot more just premium risk than it appears, I think. So I have to say that would not that would not pass the lobster sniff test right there.
Yeah, that one has all sorts of issues with it. I could mark it as to be watched, but we'll have to be watching it for a long time in 2021.
Yeah, well, or it gets taken over in a week and those things go to zero. Unless, of course, the stock goes 25 and then the guy's going to look really smart. But that would be a 3x takeover price. So
yeah, that would be pretty aggressive. That would be pretty aggressive. That would be hilarious if he picks up these crazy things and then the price is like 1830. These calls just wither and die in his face, and he was right, but not quite right enough. And that was just 30 cents, just enough to give him a taste, but not enough to actually.
That's the one where the SEC says, you know what, we're really not going to investigate those.
Yeah, exactly. You already learned your lesson. You paid your price. Yeah, this has all the whiff of someone, picked up an options book. Said, oh, these call things are kind of interesting. I think this stock's going to go up. I'm going to buy 30,000 of these. And maybe more money than sense, literally and figuratively, in this one here. Yep. There are many better ways to do that. We just outlined a few of them for you. Give us your thoughts. Do you like long-term, far out-of-the-money calls? If you listen to the show for a while, I'm guessing the answer is probably not. There are times when they are of use, but maybe not in this scenario. But here you go. This thing could triple tomorrow, and he could be laughing in our faces the whole way. We are not afraid to admit.
It's happened before.
It has. We are not afraid to admit when we are incorrect here on the show, especially the Rock Lobster. Me, not so much, but him, yeah, all the time. All right, and last up here, our third biggest individual equity option trade of the day here is dropping off a little bit in volume here. We're getting down to everyone's favorite name, LAUR. Not L'Oreal, but LAUR, L-A-U-R. This is not L'Oreal, the cosmetics company, but Laureate Education Company. This is an educational services firm out of Baltimore. Ticker symbol LAUR, LAUR. Trading today, 15.18, off about 20 cents, a little over 1%. This one looks like just a very jagged, the 1-year chart, very jagged kind of range-bound name, listeners. A year ago, it was trading not that far from where it is right now, about 15 and change. And looks like it sold off down to 13.5. That was down right around the nadir of Christmas Eve. And then it's kind of been spiking back up to 18, 16, and down to 13 and 15, and spiking all over the place, listeners, before he got up to its high of 17.20. It's like a couple of weeks ago, not too long ago. Now it's sold off again. So this looks like a nice little premium writer. It's been very range-bound for the better part of the last year or so. These kind of peaks to troughs, you could do something with those out there in options land. Let's see what our friend here was up to today. It was 8,187 of the D's 17 halves going up for 88 cents. This thing's, speaking of a nice, tight, quality market, Mr. Rock Lobster, these calls were no bid at 95 cents. So that's just juicy. I think you could drive about 5 semis through that market. Somehow, these things printed for 88 cents. I'm going to go out on a limb and say he probably didn't find a buyer for them at that price. He probably bought them himself for 88 cents. I love that. No bid. Can't even find a nickel bid for these things. No bid at 95. At least put a nickel bid out there for the folks. But no. 88 cents. People ask me, what's the issue? Why do you talk about liquidity providers all the time? It's because of stuff like that. You see a quote like that, if you're a mom and pop trader, you're probably not going to trade there because that's just redonkulous is a technical term. But c'est la vie. The guys can only trade where they can trade, and they're making markets in Q's and SPY and Apple tight, not exactly LAUR D's 17 halves. So they went up for 88 cents, 8,187 times, opening over there. Looks like it was on the box. Let's see. There are earnings between now and December, the most recent coming in August. So, Mr. Rock Lobster, looks like we got another opening buy. I said the stock was at 15.18. This is a similar scenario, but with less time to go. He paid about half the price of the other one, so or maybe a little less, a little more than half. But, yeah, so more out-of-the-money calls, this time aspiring in D's. Do you like these any better?
Yeah, I was looking at the volume on this one. It's kind of interesting. Lots of huge, traded in huge chunks everywhere. Options trade anywhere from 65 cents to 90 cents, it appears. And I think they wanted this. It's not. I think it's a little better than the what is it, Mallinckrodt trade, the Mallinckrodt trade.
Your new favorite name. Everyone's new favorite name. Mallinckrodt PLC.
So a little bit of a buyer. Then I think they kind of fractured the liquidity. So they're like, I want these, and they kept buying them at different prices. Considering the day started at 65 cents and now they're 90 a buck. there is a little bit of liquidity provider pain right there. However, a reasonable upside trade if one likes this stock. Very reasonable upside trade. But they're trying to catch about the high of the year too. So, so a reasonable trade, but a real spike in vol. Another, again, it's the whiff and the smell of kind of take overreaction because huge vol spike on these. So there's like zero liquidity in this name normally. So I think this is a to be watcher. This will not surprise me if this stock does something.
Yeah, you're right. And there was some funkiness to this ticket. They had to get some splits to get all these prices. They got 4,000 of them at 90 cents. They got 2,715 at 85 cents, and the rest actually a bunch at 85 cents, and then the rest kind of scattered therein. That's how it all works out to 88 cents net on splits, listeners. All right, Mr. Rock Lobster, you ask. Never let it be said that I am not a nice and giving gentleman. You ask for this one to be watched. I shall watch it. And we shall come back to it between now and December to see if we are correct in our Colin mockery or if this was indeed worthy of even more scorn and derision. But you know what? It's Monday. That means Uncle Mike is champing at the old bit. It is time for a little bit of the old strategery.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the Strategy Block, the portion of the show where we talk some options, wit, wisdom, analysis, education, strategy, all that fun stuff. Joining me to help me do just that, the one, the only, the Uncle Mike Tosaw. Uncle Mike, sir, we're at all-time highs where all sorts of crazy things are going on. The shiny stuff is rallying. People are buying crazy out-of-the-money calls in the odd block. What can you educate us on today, sir?
Box spreads.
Yes,
no, I'm just kidding.
The crowd loves them.
I could not resist having to throw that one in there. Gotta love the old box spread. Well, what I want to talk about today is I want to add to what we were talking about a little bit earlier on the show, and that is when to buy out of the money calls, and when it can be done, and when it makes sense, and what you can do with it, the risk of it, why you would do it, when you would do it, and the pros and cons of it. So first thing that I want to say is that there is no better trade or worse trade within the strategy. It's like a tool. It's like arguing, is a hammer better than a screwdriver? Well, if you need to pound a nail, a hammer's better. If you need to screw a screwdriver's better. And I think that's really the way with which you need to look at with which everyone needs to look at option trading strategies. I buy out of the money calls at times. Is it something that I always do? No, but I buy them for purpose of wanting to cash in on gamma and cash in on it for a low price. Now, with the market that we have right now, it's not quite as ideal as it was back when Donald Trump was a single-digit VIX president, but it still can be doable. So this is the way that I like to do it. Step one, buy an out-of-the-money call, whether it's 3%, 5% out of the money. It just depends on what you're looking to do. From there, if the market were to go straight down and do nothing, then really harm your out of the money call, then I would do nothing. And the reason I would do nothing is because I actually got into the out of the money call with the smaller amount of money. Most important thing by far when buying out of the money calls is that you have to have smaller amounts of risk capital involved in them. And the reason is that the odds are against you technically when you're trading an out of the money call. You're playing a game you might not win even if the market stays the same. It's kind of like when you're looking to try and go through the gate of a train coming. You can win or you can lose, but the problem is that the train wins on ties. So that's why you really shouldn't do that ever. Whenever you're buying an out-of-the-money call, you can win or you can lose, but the market wins on ties. And the market also wins when, even if it goes slightly higher at times, if time decay or volatility can beat you. So it's with that point that I want to lead into my next point is, how do you handle the real risk of it? The real risk, in my opinion, of out-of-the-money calls, yeah, you have delta risk, of course, but you have minimal delta risk because you used a small amount of money to begin with. So how do you handle the risk of time decay as well as decreasing implied volatility? Well, those are things with which you can do certain things that old floor traders may call it gamma scalping. I try just think of it more as just neutralizing that risk. So for example, let's say that all you have is this long out of the money premium. Some people refer to it as junk. All right. I don't refer to it as junk per se. I think it's gold if it's used right. So if we do take a little bit of a dip in the marketplace, at that stage, oftentimes what I'll do is I'll sell a put spread. I'll have plenty of money on the sidelines because remember, if I'm going to use a smaller amount of capital to buy an out of the money call, I'm going to have that money on the sidelines. So if we do take a little bit of a dip, and I'm not talking about just a straight downward pilgrimage to zero. I'm talking about just we have a little bit of a dip in the marketplace. If that's the case, I think it's appropriate to sell a put spread. By doing that, you are helping yourself with time decay, meaning that if that put spread stays the same or goes higher, you'll get a little bit of juice. And the juice that you'll get can go towards reducing the cost basis of the out-of-the-money call you bought in the first place. So when you have a situation like that, you can take advantage of it that way. Now, of course, the disadvantage is that you are creating more delta exposure because whenever you sell a put spread, it's not a neutral freebie. It is a bullish position that you have to manage accordingly. So if the market does continue to go down, you have to manage the trade just like it's a put spread. Now, what we did a couple months ago, or a couple of weeks ago, I should say, when SPY was dipping, we actually did something literally just like that. And what we were able to do is create a little bit of premium. And the premium that we created was able to offset the cost of the out-of-the-money call. Now, the market went down, and I've talked about this on the show many times. Rule number one of short spread verticals and options, don't let them go in the money. Rule number two, don't forget rule number one. We were able to roll down. We were able to still create a little bit of premium and still come out profitable on the put spread side of it. Now, with all this being said, you might be saying, well, Mike, I thought we were talking about out-of-the-money calls. How are you just diverting into put spreads? Well, remember that out-of-the-money call that we bought, we didn't spend a lot of money for it in the first place if we obeyed the rule that I'm just saying. So with that, even if you lose 100% on it, you need to be at a point in your trading to where it's not really going to be that big of a deal to you. Now, market comes back up after this put spread. Market continues to come up. Typically, at what stage do you look to get out of the money call and take profits on it? Well, I like to actually, when we get to within 1 or 2% of the out of the money call, and we're at a roughly 50% profit on the money with which we've risked, at that stage, I'll put in a tight stop loss, whether it's through a contingent stop loss or whether it's through a stop loss on the option itself, whatever your preference is. It just depends on your platform or what works best for you with what you're trying to do or how liquid the option is. By doing that, you do have some risk management in place. Now, of course, there's the risk of a gap down. You have to be prepared for that. Now, the other thing with which you can do, if you're still very bullish on this underlying, and maybe volatility hasn't come down with the market coming up, maybe you could sell a call against this, or my preference, a call spread, which I've talked about on this show, I don't even know how many times over the course of the last 2 or 3 years since I've been doing that more frequently, taking some deltas off the table. By doing that, you're also creating some theta, and the gamma of the out-of-the-money call has helped you enough to where you've increased your deltas, and by selling a call spread, you actually have the ability to take a little bit of your exposure off the table, create some mitigation in case volatility drops or time decay continues to happen. So I really believe, and then if the market does continue to go higher, at some stage it's not going to, and usually once they get in the money, I'm usually out of them at that point. But if they do go in the money, then you can still hold on to them, but just understand that you're creating a bigger and bigger position the more and more it goes in the money. Final point I'd like to mention on this is that I usually like to go 3 to 4 months out when I buy these, and then I like to be out of them usually 2 months before expiration, but at absolute worst case scenario, 1 month before expiration. As time decay becomes more and more of a factor the closer you get to expiration, I don't want to be on the wrong side of it. So that is how I like to look at buying out of the money calls if and when I do so.
There you go. Appropriate as always, timing-wise at least, Uncle Mike. Well done, sir. We got a little bit of time, so let's keep on rolling into a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is the portion of the show where you guys take the reins with your questions, comments. Sometimes we ask you guys questions as well. We got our longtime listener, Mr. J3 Dingle. He chimed in, and he sent us an error message from Mixler. It said, Mixler is over capacity, and it says we're doing our best to get everything back up and running. You can also check Mixler status. And then he wrote next to it, it says, the option block is just too popular. You've brought down the system. Yes, that I have heard from Mixler folks that it was indeed our doing. We broke it. We were just too exciting for the masses that we broke our live streaming service. Again, hopefully that'll be up and running again soon. If not, if they can't get it fixed this week, we'll have to start investigating alternatives for you guys you can listen to. Well, mostly that's why we like Mixler, is because it's audio focused, and we are indeed audio focused. But if we have to go to a Facebook streaming or something else like that, and then try to just figure out a way to work with the video component or something with that, we will do that. But for now, we're going to stay with Mixler, even though we broke it, because we are indeed just that popular with the masses out there. All right, let's keep on rolling. We also asked you guys a question last week. Remember, it was a bit contentious. We asked you guys a week ago, which of the following names has the highest 30-day realized volatility? And no cheating, what does your gut tell you? Gave you 4 choices: Tesla, Bitcoin, WTI, and the Qs. The numbers are in, at least for your voting. And surprise, surprise, Tesla pulled out to the lead at the end with 38%. Number 2, Bitcoin, 30%. Number 3, WTI, 28%. Only 4% for the Qs. No love for the Qs. And I remember I weighed in last week, and I thought I was leaning towards Bitcoin. I think Uncle Mike was going Tesla. Then he might have changed that. I forgot. And then other folks were. It was a lot of back and forth guessing on all of our different panelists, which was fun. That kind of was what makes it exciting. That's why the voting was so close there in the end. We did crunch some numbers right before showtime to see what the actual technical winner is. We still have some more crunching to do to make sure, but here's where we are right now. Remember I said last week Bitcoin was my guess, because coming into last week it was at around a 90-odd%, and that was indeed the case. And exactly when we posted that poll exactly a week ago on Monday, Bitcoin vol had already dropped to about 75%, and as of right now, it's at about a 65% for 30-day realized. Tesla, as hot as it is, right now it's shy of 50%. It's at about 47.7%. We'll have to go back and pull the number from last week, too, to make sure that it wasn't at some aberrant level. But right now, it seems like Tesla is indeed number 2. The Qs only at about an 18% realized. I think you can probably intuit. It seems like a lot of you did. The index, even though it is volatile, not going to be as volatile as some of the components to it, like a Tesla. And then WTI, another one we're still digging into to make sure. I'm going to have to head on over after the show into Quick Strike and do some deep digging into WTI. Because obviously there's different months, different contracts, how you compare which future are you looking at, things like that. But right now coming into showtime, WTI actual implied vol is at about a 40%. And the 30-day realized, I think was around 60-odd%. I want to check that to make sure. So that would still put it at number 2 or so, ahead of Tesla, but behind Bitcoin. So right now, Bitcoin still declared the leader, the winner, but I'm going to go digging to make sure all those numbers are exact. Because again, you're talking realized, well, it's all about frame of reference. I want to make sure all the frame of references line up there to make sure. But it seems like you guys like your Tesla. Not quite as volatile, perhaps, as you might think. All right, let's keep on rolling now into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we talk about what's on our screens for the rest of this week here. And a lot still popping off. If you're into the micro, if you're into earnings, you're in luck. There's still some names popping off. Not a ton, but still some. We have, of course, good old, let me see if I can pull it up here for myself. Oh, I just scrolled right past it. What's popping off this week? Here we go. We got Micron coming up after the bell today. FedEx as well. We've got BlackBerry tomorrow. Someone asked me, BlackBerry's still around? Yeah, they're still around. I think they just licensed their OS now pretty much, but they still exist. They may have a little bit of hardware still floating around out there as well. Pier 1 after the bell and Rite Aid after the bell on Wednesday. Nike after the bell on Thursday. Accenture before the bell. And everyone's favorite, Jinko Sales on Friday. So still some names popping off. But let's go to you, Colin. What are you and the rest of the Fidelity crew in the hot seat? What are you watching for the rest of the week, sir?
We got GDPs coming out later this week. So we're going to be interested to see how that comes out. I'm going to be watching how the Iran situation plays out with them coming out with sanctions, possibly more sanctions today, and how it's going to impact the oil price. If I don't have to pay more at the pump, that'd be great, but that might not be the case. We'll see how that plays out. And then also, really interesting enough, I want to see how the work IPO goes from here. Is it going to continue to fall? It doesn't seem. It's interesting to see how this has, when it initially comes out that first day of trading, how it has fallen the past 3 days, to see if that's going to continue to fall through. And then lastly, just kind of the eerie feeling to the S&P right now. After it hit that new high, just kind of be sitting at this level. So be interested to see what happens from here.
All right, and Mr. Rock Lobster, I do believe he has found his mute button again. Mr. Rock Lobster, are you eating chips? What are you doing?
No, I'm not eating chips. I think that's somebody else.
Oh,
somebody else is making that noise.
Oh, well, then I apologize. And you picked Bitcoin last week, so if you did pick Bitcoin, I will give you one of your rare victories, sir. I know you didn't win the vol this week, so at least you can win the Bitcoin. And what else do you have cooking in the land of the pit?
You're the master of the VIX. I just want to give him one victory every 6 months just to keep him sweet.
Just so
he comes back
just to
again
stay relevant.
And try. Yes, to stay relevant. It's macro. I'm putting on the Viceroy's hat and waiting to see what the G20 does and see if the Trumpmeister can wiggle something out of Yi. Good luck with that. And I don't think Yi wants to lose twice in 1 month because the Hong Kong protesters gave him the slap down. So we will see. But other than that, I think the market's going to go sideways. I am interested to see because like gold and treasuries just continue to kind of rally here, and I think everything's gonna kind of slowly rally into the Fed and everybody's gonna go, something's gonna happen because they're gonna change rates, and then maybe there might be some retracement of that. Maybe old Powell has a trick up his sleeve and he says, "Well, we'll keep thinking about it." So I think we've got a lot of those big macro events coming out are kind of screwing everything up.
There you go. And last but not least, the man who loves himself some micro, Uncle Mike, sir, what is on your radar for the rest of this week?
Well, I think in addition to what everyone else has just said, we got through we made new all-time highs last week, but I think the other thing to consider is that we are staring a big key number in the face, which is 3,000 on the S&P. So curious to see if we can make a run at that. 70 points is 1 or 2 days of a rally. I mean, it could be 1 day, it could be 1 second. You never know. But I mean, it could be 1% about 1% up days in the marketplace. And when we're that close to it, one thing that I always like to see whenever we hit a new big number like that is how much we're going to go past it, or if it's just going to be a big roadblock and having us go straight down. So we'll see what happens.
There we go. And that's going to do it for this episode of the Option Block. But before we go, let me go back around the horn. Let's go back the opposite of the way we came. Let's start with Uncle Mike, sir. If I am intrigued by the wealth management that goes on in St. Charles and I want to learn more about it, where should I go? What should I do?
Well, by all means, go to my website, stcharleswealth.com, for more information on how to get in contact with me. Would love to have conversations with people. Going into the summer, we have a lot of exciting things going on, and give me a call or check out my website and see how you can be a part of it.
And Mr. Rock Lobster, since you're in Chicago all the time, now I'm guessing people in Chicago can just book meetings with you. So if they want to do so, where should they go? What should they do?
They should go to optionpit.com and check out our mentoring programs or the Vol newsletter, any of the many things that we have going on here at Option Pit. And we would be happy to hook you up.
There you go, optionpit.com. If you're in Chicago, race over to the Option Pit World Headquarters. You might still be able to catch him before he goes back into hiding and hibernation up there in the options mecca known as Maine. And last but not least, Mr. Collins, sir, fighting your way onto the hot seat 2 shows in a row. We thank you for your diligence. And to the folks out there, if they want to kick the tires and light the fires over there in the Fidelity Options land, maybe they want to reach out to you or to Trey or to the Last Emperor, any of the rest of the crew over there, where should they go? What should they do, sir?
Yeah, so definitely take a look at fidelity.com/options, going over the different tools that are available and resources that you could take advantage of, whether it's through our Learning Center and the education that we provide. We also do online virtual classes that we teach, whether it's based on option strategies, option concepts like the Greeks, or even reading charts. We have several classes that are dedicated to the subject matter. You could also give us a call. You could talk to me directly. I'm one of 9 people on our desk currently, where you can call in, you can run your strategies by us, and we're here to play almost like a devil advocate role, be able to make sure that you're aware that the trade you're trying to put on is indeed what you're doing. So you can always give us a call at 877-907-4429 and ask to speak with the trading strategy desk.
There you go, and kick the tires and light the fires over there at fidelity.com/options. And on behalf of Colin and the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing to the program. Unfortunately, not listening live this week, but hopefully we'll get back to you on the next show. And we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.